What is going on, everyone? If you guys trade prop firms and you trade with Apex right now, you can get 80% off using my discount code DAnthony. That link is down in the description box below. Now, before we get into this video, the market continues to sell off, okay? And for some, you're making a lot of money right now because you're getting in on these short positions, and the market is so volatile with extreme ranges where TPs are getting hit very, very quickly. Congratulations. My best advice is if you knock out a couple of winning trades, okay, chasing some momentum, because essentially right now there's a lot of levels that are blown out. So we just continue to make new low after new low after new low. You're not really getting a lot of great setups. It's just a lot of quick momentum where you can definitely eyeball it, get in, make some cash. If you have been doing that, my recommendation is please just lock your account out, walk away, come back tomorrow. The more you trade, especially in a market environment like this, you are really setting yourselves up to give it all back and or blow an account because the range is so big. So what do we want to see, right? When is the selling going to stop? How are we going to approach each and every single day? Now, we haven't had a significant, or even we haven't had a dead cat bounce yet on the NASDAQ 100. And if you're sitting there thinking, well, what about Friday? You know, we kind of recovered and we almost closed green, or this day we closed green. And what about this day? Well, those days are not really dead cat bounces. These are just pauses. They're just pauses in one big move. And a pause is much different than a dead cat bounce, because a pause is more so like profit taking at the 200 SMA, profit taking here at the level of a linear regression or 100 SMA. They're just profit taking days, and they're just kind of rest periods, okay, in one continuous downwards move. A dead cat bounce is when you see a big washout and then a red to green, and we close over a previous day's channel. And a previous day's channel just means closing over the previous day high, okay? And once you get a close over the previous day high, well, now you can look to kind of bounce that into upper areas of supply. Until this market reclaims 21,372 or around that price right here, we are still in a macro sell cycle, which means that any bounce, even in a very strong looking dead cat bounce, when and if that happens, it will happen, but when it happens, you have to be mindful that in a macro sell cycle, they can just, be trucking along, and then you get one candle that just does that. And it's like, what the hell just happened, right? I thought the low was in. The low is not in until we start to reclaim the 50 SMA. We backtest, we consolidate, we hold, and we start to push higher. Okay, that's when the sell cycle is over. Now, right now, we're down about 12%, 13% on the NASDAQ 100. I believe that we're going to go down much, much more, greater than 20% until this market fully starts to recover. But that's just my opinion. However, I'm not opposed to playing longs if we are going to get a decent setup. Now, what I need to see in order for me to want to go long, because I'm about 95% short-sided, meaning I'm 95% of the moves that I'm taking are to the downside. The other 5% to the long side, I will take if I start to recover a previous day channel, okay? Or it's a very fast trade on maybe a 1 minute time frame where I'm just looking for 10 points and I just get in and I get out and that's it. Mini small interval dead cat bounce on a 1 to 5 minute chart, and I'm just getting in, I'm getting out, and I'm just, thanking the Lord that I was able to stay safe, right? But what I'm realistically looking for on a dead cat bounce is I want to see a gap down, and I don't just want to see us open up flat, or I don't want to see us open up down 70 points. I want to see us open up down 2, 3, 3.5%, where we're down. Before the New York session happens, we're down 250 points, 200 points, 300 points, 350 points. Then I will look for the trap off the top of the hour, which is at 10 o'clock hour, for the dead cat bounce to see if we could potentially go red to green. And if we can do that, then some of the areas that I would target on a potential dead cat bounce, for one, is around 19,963. That is the 5 SMA. We have been continuously getting rejected at the 5 SMA. Okay, so until we can reclaim that and take out the previous day's channel, which right now is sitting at over 20,000, I want to be extremely cautious, and I want to be about 90% sell-sided bias. I will also look to things like on a 1 hour or 4 hour time frame. On if we are getting those intraday bounces, I'm going to look for short opportunities off of 1 hour supply, off of 4 hour supply, and I'll show you exactly what that kind of looks like. So if I pull up a 1 hour chart from today, okay, and we just kind of look at the selling, we'll notice the first hour, the second hour, we definitely just have a lot of selling pressure. And on the third hour candle, we started to bounce, and we started to bounce, and we started to bounce. And we started to get back over our Bollinger Band, and we fell just shy of our 5 SMA. As soon as you see that clear rejection below the 5 SMA, and we start to get back down below that Bollinger Band, which is losing that supply that we recovered, I want to go short here. So that would be an example of shorting into demand, or excuse me, into supply. The same kind of instance here, where you you put in a flush move, you consolidate, you stay under your 5 SMA, and then this bounce kind of takes you right up to the 5 SMA, and then you lose the day's structure. Here, I want to be short, right? I want to be shorting into that supply. Right? So again, I'll look to those hour charts and look to those 4 hour charts to see, even when we are bouncing, I already know that this is nothing more than just a pause. This is nothing more than just a chop to the upside. So I still want to be short, even if I take a little mini baby scalp to the long side off one of those moves off of pure momentum. I still want to be shorting into supply, okay, into macro supply, until this market and these bulls and these buyers and, you know, everything going on with tariffs and everything going on in the world and everything in all these headlines start to go away. Until they go away, I am not going to trust any buyers, because as you can see, the buyers are nowhere to be found. Now, again, that's not to take away. You're going to get a green day. You're going to have a day where we finish green. You're going to have a day where you have, or a week where we have 2 or 3 green days. And it's like, oh my gosh, everyone's going to be calling for the bottom. Guess what? The bottom is not in until we get back over your 50 SMA. And that 50 SMA, again, am I even saying that if we have 1 day's worth of close over the 50 SMA, that the selling is over and the bottom is in? No, but we need to actually build upon it, where you spend about, you know, anywhere between 3 and 7 days in distribution over under that 50 SMA, and you kind of build up that firm support here. The same way you can see here, where we kind of tested the 50 SMA, we bounced, we lost it, we recovered, we lost it, we recovered, we were building over under until there was only one of 2 things, A or B, was going to happen. We were going to completely use this as support to just rip to the upside, right? Because we've been building over under, and you can see that potential breakout would have been massive, but that did not happen. We had a build over under, and then we had a downwards move. So again, I would like to see that type of same scenario happen to the upside once the selling pressure is over under, and then build to the upside, right? So we're a long ways away from that. Let's just take it day by day. Again, any big gap down 200-300 points, I would look for a little mini reversal off the open to see if you can catch some strength and catch a trap towards the top of the hour. But if we continue to keep losing the day's lows, we still have about a lot of room down. Like, we can still go, like, if I pull up a weekly chart, realistically speaking, guys, if I pull up a weekly chart here, you know, we still got a lot of room to go down to 18,000, 17,000. You know, in the worst case scenario, 15,000. Some people might be thinking, you know, that's absolutely crazy. Hey, you know, it's not though, right? It's not. The market's down. It's down what feels like a lot, but truthfully, we're up a lot more. So, you know, we can still definitely go a lot farther down. I would think that this cycle, you know, kind of comes like this. Right, we get pretty shy to about 16,000-ish, and then we start that recovery, that road to recovery. Now, a completely different scenarios on the table. If we were to lose the weekly 200-day moving average, then hey, we've got some bigger problems going on. But right now, everything still looks in order. I'm still calling for lower prices. You know, at least I would say, you know, at least 18,000. another 1300 points. I would say we at least come down here to 18.3, if not 17.9. I would like to see these levels get tested. If it holds from here and it goes and makes all-time highs, I would be very, very shocked. I would be extremely shocked if this level holds and we do make all-time highs from here. Just don't see it. The market, everything is just not ready to go yet. You know, it's just not ready to go yet. Meaning that there's still a lot of things that need to happen. We need to see some rate cuts. We need to see, you know, these issues with the tariffs get squared away. We need to either start making money with these tariffs, so everyone's like, okay, whatever Donald Trump is doing is working, right? Or we need the rest of the countries and everyone to come to an agreement on something where everyone is happy, and then that would be a big thumbs up to the market. We need to also see, you know, a de-escalation in what's going on with Russia and Ukraine. That's also something that's kind of hanging over our heads. There's a lot of low-hanging fruit over our heads that, you know, the headlines and social media and, you know, your regular media is just kind of gravitating towards, and it's creating a lot of uncertainty. And when you have a lot of uncertainty in the markets, you're going to get these big sell-offs. Again, this video was a little long-winded. If you guys are looking for Apex evaluations at an 80% discount, use code DAnthony. I would highly, you know, appreciate that from all of you guys. It definitely does help go back to supporting the channel. Also, if you guys would like to trade with me and get access to my course showing you guys my day trading strategies as well as mindset tips, you can definitely get access to that with the online community down in the description box below. I will catch all of you guys on the next video. And until next time, guys, trade safe, trade smart, don't do stupid shit. I'll see you guys all next time.